Hey everyone, welcome. That was the closing bell that we just got. Let's take a look and see what happened in the markets. All right, SPY. Okay, so we traded up initially. So as we opened down, we traded up. Remember yesterday, I said that wherever we open, there's a tendency for the markets to trade towards the previous close, at least in the initial movement. It doesn't always happen, but it's about 70% chance that markets trade in the direction of the previous close. And that's what we got exactly. We touched this purple line, traced back to the VWAP, actually, which happened to be at this purple line, and then went back, and then we just chopped sideways for the rest of the day with the last minute of trading spiking upwards. So well, with the gap down, this should still be, actually, we might be very close. We might be slightly positive on the day with that last minute surge. And nope, not quite. Down 0.02%. So really just chopping sideways. So what we identified in the morning was that potentially the SPY would keep chopping sideways. The NASDAQ may be bouncing, and then the Dow Jones may be pulling or topping out as well. So we didn't really talk about small cap stocks. So we'll take a look at that in just a moment. But at least so far, the S&P 500 really is doing that chopping sideways. QQQ is that up or down? That is up. It's actually up on the day. So it looks like QQQ was leading today, even though it was lagging in the morning. So that implies that we are getting a bounce in QQQ. You can see we came down and we touched the EMA 8 yesterday. We started out lower, but traded up higher, and we pierced that EMA 8 and then came down a little bit. We're pretty close to the EMA 8 and this blue resistance line that we drew before from this peak and from, I guess, just from that peak. So that is still proving to be a little bit of resistance now that we broke down below it and bounced back up. But easily, it wouldn't be too hard for us to overcome that level tomorrow. So we'll see. This is a confirmation bar. Yesterday I said it looked like we probably bounced, and then we were looking for a confirmation bar. This is actually a confirmation bar. So we need to adopt the opinion that this has bounced and we're going to start moving upwards. It may not happen right away. We could consolidate a little bit before we go up, but the confirmation bar gives us a 70 to 75% confidence, sometimes up to 80% confidence that this is going to bounce and move upwards. So it looks like we just have a very mild pullback in the QQQ. And if the other markets follow, the SPY could just continue going flat if the diamonds are pulling backwards. Then they're really just traded sideways. But if we see a downward movement in the Dow Jones and then an upward movement in the QQQs, just means a little bit more rebalancing. Once again, the portfolio managers, they will still heavily favor the diamonds into the end of the year, but maybe just trying to capture a little bit more profit at the end of the year. So I wouldn't expect the diamonds to fall too far, nor would I expect the QQQ to go up too much. So it really does look more and more like we're going to just go flat sideways, mostly non-directional, maybe slightly directional into the end of the year. SPY, what's interesting now is that with that sideways movement, our body of this candle is completely below the plus 2 ATR. The wick did pierce that plus 2 ATR, but the body is completely below it. And so we are getting closer to that eventuality that we talked about, where if the SPY keeps chopping sideways, eventually it's going to touch that plus 1 ATR. And then that would be the first place that we could expect for the SPY to move up from there. So really does look more and more like that we're just chopping sideways into that plus 1 ATR. There's a possibility of it pulling back to the EMA 20 or even lower, but right now that possibility doesn't look that strong. Let's take a look at the sectors. Let's see what happened over there. Today, we're expecting, or looks like the tech sectors or the QQQ sectors are leading today. So actually the one that led the most was TLT. was the bonds. So we see this now, we are starting to break away from that very steady upward movement along the EMA 8, and we did gap up and then basically just traded up the whole entire day. And let's see what that looks like on the intraday. Okay. Yeah, this is very, very directional. We did have a couple of very mild pullbacks or consolidations, but this is, for the most part, I would draw it like this: up, sideways, and very slightly up. So this is very bullish in the TLT, but with that jump up, that's the very beginning of what looks like could be a parabolic move. And if it goes parabolically, it could get stopped out at that MA 150, but if it goes parabolically, we probably stall out at that MA 200 and then come back down. That would not be good for stocks. So for the people who are hoping for a Santa Claus rally for an extra 2 or 3, maybe 4 or 5% in the S&P into the end of the year, your best hope is that it stalls out at the MA 150 and chops sideways. that would be the best case scenario in terms of the bond market, if that's what you're hoping for in the equities market. If this goes parabolic and hits that MA 200, most likely it's going to bounce back down pretty hard. And this has not quite created a change of trend. So unlike in the equities markets, this downward movement is not, I wouldn't really call that, well, maybe with today's movement, we might consider that a breaking of the downward trend. That would be an early signal. There's no confirmation of it until we break this high right here. So remember, what we need is higher highs in order for that to be a trend change. And since this basically sloped straight down and this sloped basically straight up, we don't have that unless you go on a more micro scale and you want to start looking at it like this. In which case you could say that was a slightly higher high and a higher low. So that would be super early to say that we've changed the trend in TLT. I wouldn't put too much confidence in that particular viewpoint. I would take, because the bonds tend not to revert to the mean that often, not as often as stocks. And so when we look at a bond chart, you can see that when it trends, it really trends. It trends. It trends. It trends. It really goes. And we don't have nearly as much chopping back and forth as, say, the S&P. Did that add? There we go. Okay. So you see how we have a lot more of these pullbacks than, so for example, in this movement from here to here, I would say that we've pulled back on a larger scale 1, 2, 3, 4, 5 times. And in this larger scale downward movement, in that same period, we've got 1, 2, maybe 3. So we don't revert to the mean nearly as often as the S&P 500, or as basically we're comparing bonds to equities. So I would be taking that larger macro view over here, that we've just gone down. Actually, it started way back here, and then we went up, and we are not quite at this horizontal right there. And that looks like that would coincide with the MA 200 if we match this. And then if we break above it, then we can start thinking, okay, the TLT has turned around and we're going to continue on this uptrend. But unless we start getting rate cuts by the Fed, I really don't see that happening. And I really don't see, despite what the FedWatch tool says, I really don't see that happening. There's just no reason for the Fed to do it at this particular moment in time. So if we do get that pullback, or if we do go parabolic and get that pullback, that's bad news for stocks. And then we could argue, okay, maybe we'll stop chopping sideways and we will actually get a pullback before we start moving higher. But short term, that seems like bad news. But for us to resume a strong bull trend in the equities markets, we actually need that to happen. Because if we just consolidate here, it's just going to go up baby amounts unless this consolidates for a really long time. And that's basically pent up energy, pent up potential, money that's sitting on the sidelines that needs to get put to work. Again, institutions can only sit in cash for so long before they have to put their money to work. So the longer this goes on, the more powerfully it might break out. But as it is with the sideways chopping movement for 2 weeks, that's not really enough for us to build a really strong breakout. We would probably have to wait for the entire month of December. And then when fund managers and institutional traders, their risk appetite comes back with the new year because they don't want to risk their bonuses in December. So at the new year, once their bonus numbers are in and they get paid, then they're incentivized to start taking risk again because they want to make their performance for 2024. So right now with the S&P 500 up 23%, there's no portfolio manager out there who's going to go, let's see if we can push it a couple more percent. They're going to be very happy with whatever they've done as long as they've kind of reasonably matched the S&P 500 or beaten it. No one's going to risk their bonus. The only guys who might be or would be like, oh, I'm only up 3%, and the S&P 500 is up 23%. That's a very bad look. Okay, so only guys who might be taking wild risk right now are the ones who are severely underperforming the markets. And so what to expect, at least so far for tomorrow? Well, right now, there's no signs of anything other than continued chopping sideways movements. We're still low on our volume. And again, if this keeps up all this week and into next week, we're just probably going to see very low volume throughout December. And that's not too surprising given what I just said. If you've done anywhere near, even if you're lagging a little bit on the S&P 500, you're still up 20%, 15% on the year in your portfolios, you're not going to go and risk your bonus. So that could be a reason why we're seeing that low volume going into December. And I think that's going to be about it. So we could take a look. We already looked at the DXY in the morning, looked at TLT. Let's take a look at VIX. I haven't looked at VIX for a while. And VIX is still very, very low. There's still, we should see a spike in VIX. Maybe not necessarily, well, probably by the end of this year. And then we did see all those contracts in VIX out in January, very far out of the money. So there's a lot of institutions betting on that same scenario right now, right? In the CPC, we're at 0.82. That is kind of low, but not really low. We would really consider below 0.70 as very low and needing a pullback. So there's more calls than puts in the market. So people are still very exuberant. And if that gets to be over exuberance, if we get down to 0.70 or below, then we'll expect a snapback pretty quickly. So for example, over here, I guess that wasn't quite 0.70, but over here, what was this number? 0.74. A 0.74 snapping back, and then within a couple of weeks hitting the 1.0 level. So we haven't seen a really extreme. So this was a really extreme right here. Nope. This is just a random dot. I don't know why it's down there. Oh, wait. Yeah, 0.72. So we haven't seen a really extreme level in quite some time. Here's a couple down here, 0.65, 0.64. And then you can see that it's really hard to see these tiny little dots. But maybe. Okay, like this. Over here, 0.70, 0.69. And then the day before that, right here, 0.6. Okay. And then we see that snap back within a week, all the way up to 0.8 and then 0.87 and then up here to 1.01. So over a couple of weeks, we see that snap back, but we're not quite there yet. We're not at an extreme level in the CPC yet. Okay, so we're not going to expect anything other than sideways trending and then maybe a resumption of the upward movement in the QQQ. It just has to overcome this resistance, which is touching right now. So it shouldn't be too difficult for it to touch that resistance. And then if it does, then we're going to either have a little bit more resistance at this high right here on this red bar, or not until we see that C green line. So we should be positioning ourselves, at least on the tech sectors, we should be positioning ourselves slightly bullish. Other than that, guys, we'll see what tomorrow has to bring for us. So I will see you in the morning for the pre-market session.